Hello, welcome back to WINFXTRADING Trading YouTube channel. The only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm gonna show you the reason why all your stop losses are hit. The general idea of trading is to ensure that all your take profit are hit consistently. For this video, you're gonna show you why I said hit more than the TP. Okay, make sure you watch the video to the very end, and if you haven't subscribed to this channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer your network to this channel so that YouTube will push you to high level of audience. Okay, so I start by reading the document, and I'm going to try to show you these things and how you should avoid them. Price movement is made up of two components separated by a definite angle called bandwidth. This is bandwidth, right? These two components are always in opposite directions and of differential energy and length output. Because of this, our SL is always threatened. To stop SL threatening, we need to make sure that 50% of our TP are triggered before major price reversal. Okay, now look at this thing in a practical term. Okay, a typical price movement, whether ranging or trending, will be like this. Okay, it will have up, down, up, down, up, down, up, down, up, down. Now, if let's say you put a buy position here, okay, this your take profit, like for you to be a profitable trader, your take profit should be here. Like 50% of your take profit should be near here, should be exactly before this turning point, so that this movement, you don't know when this movement will end. You don't know when this movement will end. You don't know. Most time this movement will come and threaten your entry. If it threaten your entry, it do what? It will go and hit your stop loss that you place here. But if you have cut 50% of your profit of your position here, if you have closed 50% of your positions here, which are in profit, as market is pulling back or retracing, the remaining 50% you can just close it. Maybe when you are closing it, those profits you have realized will now sum to those losses, making you to have a net profit or zero loss. Like you might break even. Okay, you neither lose nor profit, but your capital is preserved. Okay, or you make some profit. That's the idea of this. Okay, let's take again. You took a sell position here or somewhere here. You should learn how to take your profit here. So in the chart, I'll show you how you can lock your 50%. It can even be more than 50%. Let's say 50 to 70% of your position you have already closed. The remaining 30% are just running on a real risk management. You'll be able to trade your asset to your entry, so that if anything happens, you have already made some profit, right? Good. So this movement have capability to trigger your SL no matter where you place it, because there is a general theory here. If a market change season, yes, a retracement is a season whose characteristics is different from an impulse. An impulse is just a season. So if you trade in the direction of impulse and market is retracing, there is no guarantee that you know when that retracement will end. And you have been losing money and you will still not want to believe what I'm saying. You lose money because a season creates. You traded a given season, but an opposite season creates and go and trigger your stop loss, threaten your stop loss, attack your stop loss, and take you out of the market. So it's a war. So I'm going to chart to explain this further. Okay, look at this environment right now. Okay, you see that, we can just draw something like, we can actually draw something like this. Yes, we can just take that risk. Okay, and then we take this trade, we take a buy position here, we buy here, right? Now our SL is somewhere below this arrow, like somewhere here. Okay, now if we extend our SL zone, you see that there is a pullback or retracement that actually come and hit our SL, and then you'll be like, oh, you have placed many positions and they will go to a big profit, and they start a change season, and you think that this change in season is just ordinary, that it will not last, it will continue going to the impulse direction. No, you have been losing money and you still not want to believe what this thing is saying, this video is talking about. We are losing money because of this exact reason. See, you should place your take profit, 70% of your take profit, immediately you enter that trade, you should place it on this swing point, because you know that this is where there is probability of reversal. You even place it before that swing point. Okay, which type of money are you looking for, that you enter this market here and you cash 2,000 pips, and this 2,000 pips, one lot size is giving you $2,000 plus? What type of profit are you looking for, that you don't know how to place your TP? You place your TP within necklines and not on the actual turning point. For every turning point zone, there are necklines, the final support or resistance that was broken before the turning point set in. That's where your TP should be. Okay, so there is a small neckline. If you go to some other lower time frame, like 15 minutes time frame, you will see there is, yes, we even over, like, supposed to, like, the actual neckline is this, yes, and you see price came and mitigate it. Okay, I spend lower time frame, you see those necklines, so you buy here, place your TP there, 70%, then the remaining 30% you are going to hold long. What do? You tie your SL to your entry here. This is where you entered, right? You entered exactly, you entered the market, here, so you trade your SL to your entry, right? That's cool. You trade your SL to your entry, and what happened? The market pulled back. Okay, this is where we entered. So you trade your SL to your entry. What happened? The market pulled back during a differential season of differential length output. This length output of this season, you can't predict where they end. Had it been we can predict where it will end, we would have just taken our profit earlier. If we believe that this is going to come and hit our SL, there's no way you can hold it, and that is the biggest and the hardest problem in trading. It isn't determined. You can't determine where a particular season or length output will end. Okay, so that's what this video is talking about, right? Let's get more examples. Let's go to volatility 75, or let's check Forex market. Like let's try GBP USD. Now this is GBP USD. You think that this thing I'm saying is lie, but it's not lie. It's something that I actually have taken time to study. Okay, now we know that this place is a very strong resistance, and then we got a sell output here, we place a sell here. Okay, or let's assume we put a sell there. See where we put a sell? We put a sell here. Okay, and then we localize our SL somewhere above here. The SL is pointing to the right, meaning that our market flow from left to there, right? That's why I point the arrow to the right, and then our entry is pointing downwards because we are selling, right? So we saw this market. You should localize a neckline in Sundoa time frame where there are probabilities of reversals to put your TP. So see where we entered, and then we look at previous regions where market reversed, like here, from the same entry line price range to where market reversed. That's where your TP should be. So your TP should be here. And then what happened? Market came and hit that TP. But if you just don't know how to place this TP and you place it anyhow, what happened? The market will come and go up all the way back to your entry, and all the profits you have made have turned to loss, and that is what you call stop loss threatening. And at that level, you'll be like, oh, I'm going to close all the trade, and you close with shame and sorrows and pain. How will you feel? That's not how to trade. 70% of your trade should hit before a major reversal, before a new season starts. Okay? If you have been losing money and you are not making it in the forex market, we have about 4 to 5 groups. Each group deal with different type of market, different type of instrument. We have group for gold and US 30 or Nasdaq signals. We have group for synthetic and forex, like other forex, and like synthetic and other forex market apart from gold and Nasdaq. In this group, we relay synthetic and other forex. Like we relate synthetic and forex market, but there is no gold and Nasdaq in it, because Nasdaq is for special group, for another group. And then we have group where we relay multipliers signals, and then we have group where we relay rise and fall signals. I mean binary option trading signals. One group on that binary option, we have one group for multiplier and the other group for rise and fall. So we have another group for boom and crash market. Okay, you see. So we have multiple groups. So it depends on what you want and what you are looking for, because consistency and focus is what you need. If you are trading only boom and crash and you focus on it, you are going to be rich. If you are trading forex and synthetic, or you are trading only synthetic, you are going to be rich doing that. Okay, so if you are trading forex, you are going to be rich doing that. Why we combine forex and synthetic market in one group is to reduce costs, so that you will not be paying a lot of money to join different group. No, so that's why we do it. Okay, take advantage of our VIP channels and groups and become successful and become rich automatically. Thank you and bye for now.